Hi, and welcome to our end of July update from the Wealthy Doctor Institute, physicians leading physicians through finance. We work with physicians and other busy professionals who are not happy with their current investment strategy. We help them get this part of their lives handled so they feel empowered and in control. I'm David Ye, and in my book, The Busy Doctor's Investment Guide, I show you just a few ways where just a few adjustments each year can help build and protect wealth. Although the strategies in this book are easy to calculate each month, for those of you who are new to the concepts in this book, or for those of you who are new to investing in general, this video will try to clarify what I do every month. Feel free to follow along every month until you get it. So for this month's strategy summaries, we'll review the 20-month moving average system, review the sector server version of the MRI since we're no longer covering the book version of the MRI, remind ourselves of the rules for the 25% stop loss system, and monitor the free sector server strategy. So let's get going. So reviewing our systems, we'll start with the first system, the 20-month simple moving average system, abbreviated to the 20-month SMA. So the rule is simple. All we do is for the S&P 500 index fund, we calculate out the 20-month moving average. If the index fund is above the 20-month moving average, it's relatively safe to stay invested in the index fund. Otherwise, get out. The 20-month moving average is our safety belt. It only works if we watch it every month. So here's how it works. The blue line is the S&P 500 Index Mutual Fund from Vanguard. I use Vanguard just because this mutual fund has the most data that I can use to backtest. The red line is the 20-month moving average. Every dot on this line represents the average price, dividend corrected, of the mutual fund for the last 20 months. At the end of the month, the price of the mutual fund is $260.30 per share, which gives a moving average value of $232.65. So divide the S&P 500 index, because it moved up faster than the moving average, we now have 11.8% cushion. That means the markets can go up, sideways, or drop up to 11.8% by next month. As long as it stays within those parameters, we're still relatively safe in the stock market. Otherwise, if it drops even more than 11.8% by next month, we get out. And so this is Sector Server's version of the filter called StormGuard Armor. So instead of using a first order filter like the 20-month moving average, in other words, one variable, StormGuard Armor uses three semi-independent variables to calculate out a more complex filter, and according to StormGuard Armor, it's still relatively safe to be in the stock market as well. In fact, if you take a look at the actual indicator, for a while it was drifting down close to that zero line, but hasn't crossed, and now it's going up as well. So right now we have two indicators saying that it's relatively safe to be in the stock market. Choose one and only one and stick with that system, at least for that account that you're using the system on. Don't combine systems. So to summarize the observations for this month, the S&P 500 index gained this month. So the 20-month moving average also gained a little bit and continues to signal relatively safety in the US stock market. The StormGuard Armor filter remains in the safety zone. And remember, this system is not designed to catch peaks. In order to signal a danger zone, the stock market by definition has to start falling. The only question is, how much does it have to fall before we cry uncle and get out of the stock market? So the next system, normally we would cover the MRI or the monthly rotation investment system. However, as I covered last month, we're no longer covering the book version. Instead, what we're going to do is we're going to cover the sector server version of the MRI. And the MRI is using the same three mutual funds, the S&P 500 Index Mutual Fund, the Emerging Markets Mutual Fund, as well as the inverse S&P 500 Index Mutual Fund. So if you see, you have the index fund and the inverse fund. By definition, one of these funds is always going to be going up. So if we were to plug these three mutual funds into Sector Server, and when we plug in we do not use StormGuard, then we can see that as of July 2, there was a trigger to change out of the emerging markets and into the US stock market. So you can see how the yellow line, which is our strategy, used to parallel the green line, which is the emerging markets. But on July 2nd, we switched to the S&P 500 index, and now it parallels the S&P 500 index. So the observations for this month: on July 2nd, there was a trigger to switch from the emerging markets to the S&P 500 index mutual fund. Now, I have to emphasize, if you're following this trade, you'll likely receive an email or a text alert. If you have not, check your settings on Sector Surfer. The next system is the 25% trailing stop loss system. This is a system that we use when you absolutely have to buy a certain stock for some reason. I do not recommend buying individual stocks because individual stocks have idiosyncratic risk. In other words, if you have bad news that come out about that one stock, it can tank the stock overnight, and you may lose more than we can control for if it gaps down. But some people have their favorite stocks, and unfortunately, when you're in love with stocks, at least use a system. And here is a system that you can use with individual stocks. So here's a formula. We never want to risk more than 1% of our portfolio on any one stock. So if you really want to buy that stock, you use up to 4% of your trading account to buy that stock. So if it drops 25%, you only lose 1% of your portfolio. And then, if the stock goes up by 33%, this is a magic number because when it goes up 33%, if it drops 25% from this value, you're basically broken even. So at this point, you're relatively riskless. Nothing is risk-free. However, at this point, you can use another 4% of your account to buy more of that stock and then update your trailing stop loss order to reflect the new increased number of shares. And you keep doing this. Whenever stock goes up 33% more, buy 4% more of stock until you finally get stopped out. If that stock really was taking off for a moon, you'd probably buy several batches of the stock. But if it tanks, and unfortunately most of these do, at least you won't risk more than 1% of your portfolio on that one stock. So the next system is your own Sector Surfer system. So just like with the 25% trailing stop loss system, I can't tell you how your system is working so far because every system is different. Depending on your stock or mutual fund or ETF selection, your Sector Surfer system will behave differently. So, Sector Surfer, you can think of having two main tools. Number one, it has something called StormGuard Armor, which is like the 20-month moving average indicator in that there is a way to gauge whether or not the stock market itself is relatively safe or dangerous to be investing. And then there's a sector rotation component where, like the MRI, only more robust, Sector Surfer extrapolates which funds in your universe of funds have the best momentum at any one time and invest in that one fund. Sector Surfer can only handle up to 12 funds at a time, trying to compare all 12 funds to see which one has the best momentum. If you combine the sector rotation with the bull and bear market filter, you can combine into a combined system where you can rotate only through stock market funds during bull markets and rotate only through bond market or other non-stock market funds during bear markets. Now, throughout these videos, we've covered some nuances when constructing these strategies. Just be aware of these nuances when you're constructing your own strategies on Sector Surfer. And just remember, if your Sector Surfer strategy is set up properly, you will get a signal through text or email. If you're like me, being very anal, or if you just happen to have many accounts or strategies, you may want to log in periodically just to make sure you didn't miss a trade signal. So when you sign up for Sector Surfer, you get an example-free strategy. This strategy you do not have to pay for. If you modify this strategy or if you construct a new strategy, you will have to pay $10 per month. But with this example-free strategy, all we're doing is rotating through these 6 stock and bond mutual funds, going to cash when it's relatively dangerous to be in stock market, and using a different flavor of StormGuard armor. Obviously, there are many different things that we can do to improve on this strategy. However, if you like this strategy anyway, it is free after all. Remember, last month we did have a trade alert. This month we're still in the small cap fund. So in summary, we've reviewed our systems, including the 20-month moving average system, as well as the Sector Surfer StormGuard armor equivalent, the monthly rotation investment system, at least a Sector Surfer version of it, dealing with stock tips using the 25% trailing stop loss system, and reviewing the sample-free Sector Surfer strategy. Of all the systems last month, the Sector Surfer version of MRI and the sample-free Sector Surfer strategy had trade signals. That means those of you who have Sector Surfer accounts, you probably had trade signals as well. Be sure to check your accounts if you did not receive any signals. So I know I talked to several of you each month. Some of you get it, some of you not so much. But I do have to ask you, are you happy with your current investment situation? If you're using a financial advisor, do you understand your financial advisor and what they're doing with your accounts? Investing doesn't have to be hard. In fact, investing is just a small part of overall financial planning. So for those of you who are not happy with the current investment situation, I invite you to schedule a complimentary investment wellness checkup and breakthrough session. Just go to my scheduling website and just click on whichever time slot works for you. When we have our wellness checkup and breakthrough session, what we'll do is we'll go through a series of steps to help you understand what's going on, including this very important critical first step of clarifying why you're investing. What are you investing for? Based on your goals and dreams, we're going to have different tools that we'll need to use to help you get to your dreams if they're reachable. And then from there, we can discuss the essential investing building blocks for your particular situation. From there, we'll determine what has stopped you from having the investment results you want. Some of you have not been investing for years. Others have been investing but without a plan and without a clear picture of where you want to go. Some of you invest in a more passive way and have not been getting the results that you wanted. So let's take a look at what stopped you from having the investment results you want. Then we'll identify actions you can take that may move you towards the financial goals that you desire. Then finally, we'll complete the breakthrough session with the excitement of knowing exactly what to do next to create the financial future you really want. I mean, think about it. Even if you think you're investing well right now, if you had a financial cancer or taking time bomb somewhere that you weren't aware of, wouldn't you rather know now, before the problem grows and metastasizes and it's too late? We encourage patients to have regular health checkups for a reason. And so, until next month, invest safely.